Hey guys, this is AI Mike Zlotnik, not the real Big Mike. Thanks for watching. I love sharing what I've learned about real estate investing over the years, and I'd like to keep you in the loop. Subscribe to the channel for more of my take, and if you want to see the deals we're working on, head over to tempofunding.com.
Hey folks, this is Big Mike Zlotnik, and today's discussion is going to be as basic as it gets and as sophisticated as it gets. And the topic is how to invest in real estate. What are your options? So we'll start with the most simple things where you buy a property yourself, and then we'll advance to the more sophisticated ways to invest. So let me start by saying that most of us typically invest in real estate. The first property that we acquire for most of us is our home. We start with buying a property individually or with your spouse or your significant other. So individual ownership or a partnership is the simplest way. And you're investing actually in your home first. But let's move beyond the home, primary residence or second home. Let's talk about investment properties. So you could invest by buying a property. You could buy an apartment, you can buy a house, you can buy a commercial property. You basically buy as a single owner. Now, you can do it in a sophisticated way. You can create an LLC and buy through an investment entity. Most investors do it that way for many reasons, including asset protections, tax efficiency, etc. So again, you could buy the property yourself. You could buy the property with one or more partners. And for most of us, it's a simple acquisition of a rental property. Could be completely passive investment, or it could be semi-active. We'll talk about that in a second. So for most of the properties that you own directly or with partners, it's at least semi-active, maybe an active ownership. And the reason for this is because you're dealing with tenants, you will self-manage the property, you will be dealing with leases, you will be dealing with repairs. And if you don't do the work yourself, you could hire licensed contractors and other folks. So property ownership directly or with partners typically is known as an active. In some cases, it can turn semi-active if you own a turnkey property. If you own a property in another town or a city, it could be a passive rental, a house, rental house, could be an apartment, or it could be a Airbnb type of property. One way or the other, if you buy the property away from where you live, far away, you have to engage a professional management company. Then you manage the manager. It's a semi-active or semi-passive approach. You are still not completely passive, but you will own the property and you will manage the manager to operate the property. Next, you can actually invest completely passively. So completely passively means you invest into a fund or a syndication. Syndication is just another form of partnership where you have operating partners known as the general partners, GPs, and then investors who are known as limited partners. They are contributing capital while the operating partners run the property. So these type of investments are known as real estate partnerships or syndications. Funds is the next level of sophistication where you have many investors and many investments. While syndication is typically there's a one property, one commercial property. Could be a multifamily apartment building, could be an open air shopping center, could be an industrial property, and other type of properties on the commercial front. It could be also residential properties. So it could be a portfolio of residential properties. Again, when you invest with an operating partner, you're investing in some form of a partnership or a syndication. When you go into a fund, there are typically multiple investors and multiple assets. So funds can be broken into two categories primarily. One is private funds and then publicly traded funds. So you can actually buy stocks on exchanges. These stocks are funds that you buy, similar to mutual fund, but in real estate, they're called REITs, real estate investment trusts. So you could buy a publicly traded REIT and invest in real estate that way. Of course, you have to understand what is the REIT strategy. It could be a self-storage REIT or a multifamily REIT or an industrial REIT. Or you can invest into a private fund. And a private fund typically doesn't trade on public exchanges, but it's got its own benefits versus the publicly traded securities like REITs. There are advantages and disadvantages to investing in real estate and also into publicly traded REITs versus private funds or syndications partnerships. Just to be very clear, real estate moves slow. So when you invest in real estate in a fundamental manner, you don't expect to get your returns fast unless you buy a stock and it goes up fast. The beauty of investing in publicly traded REITs is they are publicly traded, they are liquid, means you can click a sell button and get liquidity rather quickly. But they also could be significantly more volatile as news travels fast, and public markets are generally known as efficient market, while the private opportunities are generally inefficient, meaning that you can get a great deal through a private fund or private syndication with the better advantages for you as an investor, better cash flows, better upside, if you find a great sponsor, great general partner, and that finds a great deal. So you could, just to summarize, you have many options. You could invest individually, you can invest with partners, you can invest with your spouse, you could be active, you could be passive, you can invest in commercial real estate, you could invest in residential real estate, you can invest in industrial real estate. You have a broad range of options. Many folks start with a simple, let me buy a property that I near my home, own it, operate it, be semi-active, if not fully active, managing the property. Some folks over time buy what is known passive properties like turnkeys, but they are semi-passive because you have to manage the manager. And then over time, many investors gravitate to more advanced structures, such as either publicly traded funds like REITs or private funds or private syndications. One way or the other, understand the benefits of investing in real estate, such as depreciation, amortization, the use of leverage, cash flows while you wait for appreciation. Real estate is one of the most tax advantaged asset classes. It's one of the most opportunistic asset classes to invest for long term. Most of the wealth in the United States is created slowly over time in real estate. This is what I learned many years ago. Of course, you could make money many other ways. You can start a business, you could sell a business, you can invest really well in something that goes up very fast. But in general, real estate is one of those conservative investment strategies that still needs underwriting, still needs proper approach and proper management. But it is a strategy that's worth considering and to include in your portfolio as part of your diversification. I hope this was helpful. I hope this gives you a little bit of a perspective. If you like this, once again, please click like, subscribe, turn on notifications. Until the next time, thank you.